Okay, everybody. You're never gonna guess who it is. Yeah, it's me, Gregory Mannarino. Can everybody hear me? Okay, everything is cool. We're all happy, and it's just a beautiful day, of course, and you know why. No surprise. First of all, let's start off with this post market report. Another beautiful day in the neighborhood. Record high for the Dow Jones Industrial Average. Record high for the S&P 500. But it was the Nasdaq that was the biggest winner today. No surprise again. Tech in 24. Tech in 24. Just wait. We haven't seen anything yet. Yes, this market needs to drop, and it needs to drop big. But tech in 24 is where it's at, along with war, death, pain, suffering, and a lot of happiness too. Because you and I were always happy. It's a sad state of affairs, no doubt about it. But you gotta at least try to keep your chin up and find something good. Anyway, so with regard to the market, okay, again, no surprise. 10-year yield didn't do much, about 4.1. Now, with that, I said this a million times. You can't just look at the 10-year yield, which is the benchmark. It's extremely powerful. You got to watch it, but you got to look at the dollar. Dollar's got weaker a little bit, so there is a compensatory mechanism, and that equals risk. And this market seems very comfortable right now with the risk situation, understanding what the creature, it, freak, Yellowstain, puke said. Yes, everyone, there's going to be 3 rate cuts this year, probably starting in May. That was our target, you and me. Okay. I think we're pretty much on top of this. It's unbelievable, isn't it? Anyway, so with that, you got crude oil catching a nice bid today. I mean, what did we find out yesterday? You got a lot of big bets being placed on a higher price for crude in the future. Now, this could lead again to a wango tango, contango situation here, but I think we're probably, and don't hold me to this, I think we're over that right now, especially in light of the war, the death, the pain, the bombing. This is going to get a lot worse. So anyway, we got, what else happened today? Cryptocurrencies catching bid, doing well. Gold flat, silver did fall under a little pressure today. With regard to this market, let me just say this too, in case you haven't noticed, and I know you have, because every single one of you here, again, you're an out of the box thinker. You're looking at this and say, okay, what's really going on? What's happening here is, again, these major corporations are laying off thousands and thousands and thousands of people. Last month alone, almost 90,000 people were laid off. 90,000 by these corporations, and they're not done yet. Okay. So what's happening here is, as these corporations are laying people off by the thousands, they're being rewarded. Wall Street is bidding them up. So, what's the trend? What is Wall Street reading out of this? Lay people off. We're going to bid your stock higher. So you can expect a lot more people to be laid off. Unfortunately, it's the way it works. It's the way it goes. Now look, this morning I did a video, and I've been talking about this, people. This is nothing new, but one day, and I know I keep saying this, I'm going to take a snapshot of what my email box looks like. It's a disaster area, and again, I do apologize to you if I don't write back. It's impossible for me to keep on top of that. Anyway, so again, look, this whole issue with commercial real estate, with the banks here, the regional banks here, there's going to be failures. Okay. More. They never fixed anything. They tried to convince you. What did they do? It's a laughable what they did. But it's, again, the public gets duped, not you and me. Because if you remember, right at the onset, first of all, we called this before anybody else. No deposits, no loans, no deals. Okay, we watched what happened to the regional banks here. A couple of these went under. Some big Wall Street institutions, stepped in here, bought this stuff for pennies on the dollar. They're not done. You see, the big institutions are counting on the smaller institutions failing, and they're going to. And look, I'll talk more about that too. There is one Wall Street bank, and you know which one I'm talking about, that I think is the most likely to fail. Now, look, this goes beyond. Let's just put a little perspective on this. This goes beyond the no deposits, no loans, no deals, and people withdrawing their cash. Okay, you're not allowed to know that's happening, but it is. But talking about commercial real estate, which I just mentioned a moment ago, it's another black hole that we have no idea the level of risk that these institutions have taken. Again, what does this do? When you have a situation, and we covered this morning, let me just say it again, where central banks are suppressing rates, making money easy to get, what happens? You get these kinds of things. You get risk, unnecessary risk taken by institutions. The Federal Reserve is counting on it. Again, they got to consolidate the system. They have to bring this system to its knees first, along with the people, and they already got us there. And so this is deliberate. There's no doubt about it. See, if you and I knew about this and are able to talk about it exactly, look at what the accountant just wrote. Look what Alan Greenspan just wrote. You're 100% right on that. We'll talk more about that in a second. With regard to Bank of America, that's the one. That's the one I think is the most likely to fail. Of the mega institutions, but again, look, they all have, it's a black hole. Like I said, no one knows how bad this is. But again, I told you last year, and I probably said it again earlier this year. Yes, we need to ponder it and think about it. I mean, look at this headline. This is Bloomberg. Okay, U.S. commercial real estate contagion is now moving to Europe. First of all, this is a global phenomenon. There's no contagion here. Nice headline. It sounds really good. Contagion. We're all going to get mutated. Or something along those lines. But again, look what I wrote. Direct result of easy money policy. I mean, I like to write little notes to myself. Look, this thing here. First of all, okay, I know what you're thinking. Some of you, black swan. No. No, this, my lovely friends, cannot be a black swan. It has the potential to hit the global economy, or should I say you and me? Because if you think that this here, the banks aren't going to get a bailout or a bail-in, well, then you don't know what's going on, because this is going to be blamed on COVID. It's COVID that caused this, so they cannot be held responsible. Oh, no. And that's what they're setting up right now. That's another reason why you're not going to hear about this for a while. We can't have a bailout or a bail-in during a presidential selection cycle. No Freudian slip here, okay? Next year, when the new traitor, should I say, whoever wins the position behind the Resolute desk is a traitor of the highest order. All they're going to do, in case you need a reminder, is continue to empower the Federal Reserve, find reasons to deregulate corporations, let them run amok again, more easy money, lower the tax rate. That's what we're going to get here. You know that. So anyway, look, we're calling the chips where they're gonna fall before, and like we always do. I mean, it's a beautiful thing. But again, this here is not a black swan. Everybody knows about it. Everyone's talking about it. We're not going to be able to see the gravity of this, okay, until this whole thing kind of unfolds. I'm telling you, if this happens this year, I'll eat this piece of paper, or I'll save it and I'll eat it. I think it's going to happen next year. Where we're going to see this come to light. But again, do you think for a moment that any big institution, not even Bank of America, believe me, they're going to fall for another reason. But this is going to get bailed out or bailed in because they can't be held responsible. Who could have seen this one coming? Who knew they were going to shut down the entire global economy and come up with something like this, a master creation that was going to wipe out a whole bunch of the population with more to go? Oh, yeah, absolutely. You know, that's what's going to happen, right? We haven't even begun to see the ramifications of that down the line. But That's a whole kind of other situation here. You and I are crystal clear on that. With Bank of America, okay, why Bank of America? If you look at Bank of America, all right, compared to their peers, they're at the bottom rung. They're at the bottom rung. And there's something else too that plays into this, and it's more of a psychological thing. Like this whole thing, nothing is what it appears to be. You all know that. It's a psyop on a grand scale. The reason why Bank of America would most likely fail is because of, again, the name Bank of America. It would be symbolic. I can tell you this. There's a couple of institutions that are not going anywhere. One of them is JP Morgan. Why? Jamie Dimon, the CEO of JP Morgan, he is in bed with he really runs the system a lot more so than you think. He's the go-to guy all the time when there's a problem. And the other one is going to be Goldman Sachs. These two institutions are never going anywhere. They're going to suck everyone else dry, and they're going to absorb a lot of the other institutions, or definitely the smaller institutions, for pennies on the dollar. So you could count on that. Anyway, that is pretty much what I want. Let me just double check all this here. We spoke about the regional banks this morning. I told you how the market is rewarding companies for laying people off by the tens of thousands. Unbelievable. Bank of America, that's my number one pick. Could I be wrong? Absolutely. Could there be more? Yeah, sure. But we'll see. We'll get there. Oh, consumer credit. I love this part. Consumer credit. It didn't expand as much as anticipated, but it's still expanding. You see, what they mean is consumer debt. Consumers continue to take on more debt as defaults continue to skyrocket. Imagine my shock there. Let me just double check this real quick here. Anyway, and the whole COVID blame. Again, do you think I'm wrong? I want to hear from you. I want to hear from you on this. So we understand that this, it's contagion. It's really scary. Yeah. How many of you think that they're going to just let these institutions go? They're going to allow them to fail because their books are saturated with, bad loans, which they have across the board, which are getting worse, and these bad commercial real estate loans. So you think they're going to be responsible, or do you think you are going to be responsible? You and me. Yeah, I think we're on the same page there too, people. If any of you said they will, well, then maybe you should go back to smoking the crack pipe, because no. N-O-N-O-N-O. All right, what do you guys and girls want to cover before we call this lovely evening done? More crack. Yes, Joe. Lots of crack, Seems like there's a lot of people into that these days. Not me. Not Greg. Nope. Not me. Newbie need information. You got to, if you're a newbie, you got it's all right here. Just stick around, talk to the people here in this blog, and you're going to be brought right up to speed here. Honestly, are the triple Qs ever going to come down? Yeah, they're going to come down. Absolutely. I want them to come down. I'm telling you, tech is going to be the place to be. I'm putting my money where my mouth is, people. You know how I'm playing this. I'm buying a lot of JEPQ. Bought more today, as a matter of fact. And I will continue to buy more of that. Again, I want to be paid to own this ETF, and they pay you monthly. A nice dividend there. Still own a hell of a lot of JEPI as well. Building my JEPQ position, you will know that. Is it going to fall? Absolutely, it needs to. Look, I mean, come on, another record high here. Again, they make a big deal about the Dow record high and the S&P record high. I got it. But the NASDAQ was the big winner today on a percentage basis. But again, it's what they need to do. It's what they have to get you to focus on. You all know that. I think we're pretty much on the same page. Very low fees with that ETF. Look it up for yourself. All right. Just go to like Yahoo Finance. You can look up all this stuff. And I think we're pretty much on the same page with that as well. All right, people. Look, so that's it. I think we're going to call this, all right, for today. We will reconvene in the morning as we always do. And thanks for being here again. Thanks for your friendship, your love, your support. Thank you for these thumbs up. I wish we could do a little better than that, because again, it allows the algorithms to pick this stuff up and these videos get out there. And I count on you. Please share this stuff, comment, get it out there. I want to hear from you on these things. All right. It's important. All right. We're a team. This is a family as far as I'm concerned. All right. Love you all from the heart. Take care of yourselves and take care of each other. All right. See you in the morning.